Let's talk some more earnings. We got one other name here on our list. Caroline Woods joins us from New York for a look at UnitedHealth. Been a very tough stock to trade the last couple years. Tons of chop, some kind of surprises from pricing and Medicaid stuff over the last year, Caroline. So what's the main story here for this earnings?
Not to mention a hack as well, but yes, UnitedHealth, the shares are higher right now, up more than 3%. So officially in positive territory for 2024, albeit only modestly, up about 1% year to date now. But the health insurance giant reported better than expected earnings and revenue. In terms of the actual numbers, adjusted EPS of $6.80, topped analyst expectations of $6.65. Revenue, meanwhile, rose more than 6% to $98.86 billion. The expectation was for $98.71, so slight beat there. Total operating costs did rise, though, more than 7% to $90.98 billion, so more than revenue. That included an 8.6% uptick in medical costs to $65.5 billion. On the call, the CFO said changes in patient makeup within Medicare Advantage plans and disruptions from its suspension of care due to that hack are issues driving up medical costs. Now, the medical care ratio, which is the percentage of premium dollars spent on services for the quarter, rose to 85.1%. From 83.2%. That was above the consensus of about 84.5%. And for that ratio, lower is better. Total people served domestically increased to 29.57 million, and then people served in Medicare Advantage also increased to 7.77 million. I'm sorry, not $1 million, million people. In terms of the cyber attack that we mentioned, the company said it has restored most of the affected Change Healthcare services, but on the call, the CFO did say that they're aware that payment and claims flow is not totally back to normal for some providers after that hack. In terms of the impact to the second quarter, it was about 92 cents per share, or about $853.8 million in terms of bottom line impact. And then the total cost of the cyber attack for the year is expected to be $1.90 to $2.05 a share, or about $1.76 to $1.9 billion. And then in terms of outlook, they did reaffirm their 2024 adjusted EPS guidance of $27.50 to $28 per share. So taking a look, shares up about 3.5% right now. So overlooking maybe the higher ratio and the fact that medical costs, the rate of change superseded the revenue increase. But focusing on the beat on both the top and bottom line, it seems.
Hacks, no bueno. That's a pretty big chunk of costs, like more than a whole quarter of earnings. So kind of brutal, but I guess the market's saying that at least over and done behind them. Whole group up, though, too, so it does maybe, I think, send a message that perhaps some of the concerns of these costs that have weighed on the stock maybe have now been fully understood, realized. So a pretty fun little price action today with the drop earlier than the rally back. We'll see if it holds. Again, this has been a really, really choppy stock, but I know that many still view it as a pretty reliable healthcare trade. So it would be nice to see it hold above its high from May. And we're just trying to do that right now.
It also helps that it was down 2% year to date heading into this report.
Definitely.
So it wasn't like some of these other companies outside of healthcare that we've seen that had rallied into earnings, and then the bar was so much higher. So down 2%, the bar's not all that high.
Yeah, totally. I think some of these kind of unknown exogenous risks and confusion around pricing and surprises, it hasn't been a great year for them in terms of news flow. So, all right, maybe we put it behind us for UnitedHealthcare, possibly one to watch. All right, let's talk match and Starboard. A lot of easy puns here, finding a match with Starboard. But I don't know, the stock's up 6.5%. I'm really interested in this because all these dating stocks have just been terrible. I mean, so bad. I don't know how long Bumble's going to be listed. And the fact that they're going for match, Bumble's up, but I don't know. I'm not sure, there's going to be enough love to go around. There's going to be so many accidental puns here. Go ahead, Caroline.
Well, I'm not playing into the puns, but yes, Match is attracting some attention from an activist investor, and that's Starboard Value, which has built a 6.6% stake in the online dating company, making it the third largest shareholder. It's pushing for a possible sale if a turnaround isn't successful. It says Match is a growing, high-quality business in a secularly growing industry and is deeply undervalued. So you mentioned Match shares on the rise today, up almost 7%, but still down about 6.5% year to date, down 30% over the past 1 year. And this is despite what Starboard thinks are attractive assets like Tinder and Hinge. Said there's significant room for improvement in operations, financial results, and capital allocation. Thinks Match should improve Tinder, which represents more than half of the company's total revenue, through product innovation and things like cost cuts. Says Match has the opportunity to improve revenue growth from its expected 2024 growth rate of approximately 6%, and the opportunity to meaningfully improve its profitability. Points out that the stock has actually tumbled 70% since separating from IAC back in 2020, while the S&P 500 has climbed 81%. And also thinks Match should be more aggressive with its share buybacks as well. So it says if Match's management and board are unable to meaningfully improve profitability and unlock the company's value, Starboard believes it is a unique and highly valuable asset that may be well suited to operate as a private company as well. So pushing for a sale or potentially private company, and it's giving shares a boost right now. They're up about 7.8% right now.
Yeah, wow. First time there's been a real move here. I also forgot about Grindr when I mentioned the dating apps. That one's doing great. So there you go. Match, Bumble, not so good. Guess Grindr's found the right avenue, because these stocks just have not worked. And it'll be fun to see what they do with it, whether or not they really want to make big product changes or if they just want to trim down costs. I mean, seems like there's a lot they could find, to work with. Obviously, people want this. It's an essential, application in some ways, one could argue. So we'll see what they do with it.
And Starboard certainly seems confident that the company can.
Yeah, the language is very positive.
I mean, they didn't go after management. They were talking about Bernard Kim, BK, as he's called, saying that they believe his experience in the gaming industry should provide, good insights into this turnaround. So it wasn't necessarily an attack, but just more so saying, this is the, it's just not performing well, and there's certainly a lot of potential for it to, especially being such a leader in the space.
Yeah, that's where. Again, it's like it's very positive because, they seems like they just think it's undervalued, which I could see. You've got anything that has a huge group of people and users who are highly motivated to engage in the app. It seems like there's potential there. So we'll see what they do with it. I'm kind of a little surprised that Bumble's up. I'm not sure if the logic makes sense there. I feel like if you really kind of like shift the paradigm in one direction to unlock value somewhere, it might come at the cost of the competition. So, hey, real quick though, let's talk Reddit real fast. Downgrade here. Stock's getting hit. I mean, what did they say in this note?
Well, it's a downgrade for Reddit, which has been a real outperformer since it IPO'd here at the New York Stock Exchange back in March. It is trading above $70 a share. It was trading above $70 a share, now just under it after pricing at 34. It closed around 50 on its first day of trading, but it's getting a downgrade from a former bull. Loop Capital is moving to the sidelines, downgraded it to hold from buy with an unchanged price target of $75, and it's a valuation call because shares are approaching its price target, and it says it's now trading at 10 times its 2025 estimated revenue. It says Reddit now trades at a significant premium revenue multiple to its peers, and that there will likely be selling pressure when the lockup expires on August 9th. And even assuming likely upside to 2024 and 2025 estimates, it does not believe the upside reward meaningfully outweighs the downside risk. So we're seeing Reddit shares taking a hit, down about 4.5% right now on this downgrade. Of course, according to Loop Capital's price target, it still has about $5 upside from here. but it kind of made the case that even if 2025 revenue is 10% ahead of their projection, which is already slightly ahead of consensus, a 10 times revenue multiple would then suggest an $81 price target, which they say is not sufficient upside in their opinion to maintain the buy rating.
Okay. All right. Well, kind of a dramatic response for a hold from a buy with the price target $6 above. But okay. All right.
But check out the median. It's only $65 a share. So analysts really split on this one.
And this was kind of like the top bull.
Holds.
This was like a very bullish analyst that now is kind of moving to the middle of the pack. Okay. All right.
Yeah, I need to check to see if it was what the highest price target on the street is. But
sure.
But yeah, it was, it's certainly it's still a bullish price target compared to some of the others.
All right. Thanks, Caroline. Appreciate it very much. We're at it down 5% right now. Thank you, Mrs. Woods, joining us from the New York Stock Exchange.